Most people don't think about their credit score until something goes wrong. You don't see it, you don't feel it, but it's working behind the scenes, shaping your life in ways you never imagined. From getting your first apartment, to buying a car, it's silently judging. And the moment you need it most, that's when reality hits. Lisa never thought her credit score mattered. But when her car broke down and she couldn't get a loan, reality hit hard. That little 3-digit number had real-life power and it shut her down when she needed help the most. Now, she's starting from scratch. It's way too easy to swipe a card or click apply without thinking about what comes next. No one really teaches us how credit works. It's like getting thrown into a game with invisible rules and losing before you even start. That's the trap most people fall into. Whether you're 18 or 38, your credit score can open doors or slam them shut. This isn't just about money, it's about freedom, choices, and the future you're building. If you've ignored it until now, don't worry. This video is here to help you take control. Your credit score can make or break your future. Let's make sure it doesn't break it. Hey everyone, I'm Sam. Welcome to Sam the Finance channel, where smart money moves start here. Before we dive in, hit that subscribe button and ring the bell for more simple, real-world money tips. Quick heads up, this video is for educational purposes only. Always do your own research or talk to a financial advisor. In this video, I'll walk you through exactly why your credit score matters, how it works, and what you can start doing today to build or fix yours. Let's make it make sense without the financial jargon. Let's jump in to don't ignore your credit score. Here's why you should actually care. Think of your credit score like your financial report card. Just like school grades show how well you're doing in class, your credit score shows how well you manage your money. It tells lenders how responsible you are with credit. The better your score, the more trust you build. Credit scores usually range from 300 to 850. The higher the score, the better your chances of getting approved for loans or credit cards. If your score is low, you might face higher interest rates or even get denied. So yeah, it matters. Your credit score is shaped by your behavior, not just your income. Paying your bills on time and not maxing out your cards makes a big difference. It's like showing up to class and doing your homework. It all adds up. Good habits equals good score. Having a great credit score doesn't mean you have to be rich. It's really about how smart you are with what you've got. Anyone can build good credit with the right habits and mindset. It's about control, not cash. Your credit score affects how much things really cost. If your score is low, lenders see you as risky, so they charge more interest. That means you end up paying more every month. For the same car or house, someone else gets cheaper. It's like getting penalized just for not knowing the rules. Your credit score can even decide if you get the job or apartment you want. Employers, landlords, even insurance companies sometimes check it to see if you're responsible. That little number follows you around like a reputation badge. It's more than just money, it's trust. Credit mistakes don't go away quickly. They can stick around on your credit report for 7 to 10 years. That's like carrying a heavy backpack full of bricks on every new journey. The weight follows you, even when you're trying to move forward. A good credit score is like a magic key. It can save you tens of thousands over your lifetime. Lower interest rates, better deals, more options. It's the difference between surviving and thriving. Taking care of your score now can mean freedom later. Payment history makes up the biggest slice of your credit score, around 35%. Paying your bills on time is like handing in your homework before the deadline. When you're late, it's like flunking your grade, and lenders remember that. It's the first thing they notice, and it says a lot about how responsible you are. Credit utilization is 30% of your score. Think of your credit like a platif. It's overflowing with debt. Lenders get nervous. Keeping it half full shows you're in control. Less is more when it comes to how much credit you use. Length of credit history is like having loyal teammates. It makes up 15% of your score. Older accounts show lenders that you've been around the block and handled credit over time. It's not about how many accounts, but how long you've had them. So don't be in a rush to close your oldest ones. New credit and credit mix round out the last 20%. Opening lots of accounts in a short time, that's risky. But if you've got a good mix like credit cards, student loans, car loans, it shows lenders you're a pro at handling it all. It's like showing off your full toolkit. Some people think having no credit is a good thing, but it's not. Without any credit history, lenders don't know how reliable you are. It's like applying for a job with a blank resume. You need credit activity to build a strong score. A lot of people worry that checking their credit score will hurt it, but that's not always true. Soft inquiries, like checking your own score, don't lower it at all. Only hard inquiries from lenders applying for credit can. Don't be afraid to check up on your score regularly. Some say you should carry a balance on your credit card to help your score, but that's just not true. Paying your balance off in full is better for your credit and your wallet. Carrying debt just adds interest and risk. Don't let this myth cost you money. It might not seem like a big deal to miss one payment, but it is. A single missed payment can drop your score quickly and stay on your report for years. It's like stepping on a trap that sets off alarms for everyone. Stay on top of your payments and protect your score. Everyone's got a credit score, but not everyone pays attention to it. Think of it like your financial passport hit can open doors or shut them. If you ignore it, you might miss out on loans, homes, or even jobs. But the good news, it's free and easy to check. You're allowed to get a free credit report from each of the 3 bureaus every year, no catch, no tricks. That means you can check your financial health 3 times a year. It's like going on a treasure hunt for the truth about your finances. Just go to annualcreditreport.com and start digging. There are tons of free tools even. Your bank might offer one to track your score and send alerts. These tools are like magical artifacts that warn you of danger ahead. They'll tell you when something changes in your credit world, good or bad. Just turn them on and let them do the watching for you. A shocking number of reports, 1 in 5, have errors, and those mistakes can cost you. It's like finding a trap on the treasure map that wasn't supposed to be there. But here's the cool part. Fixing errors can actually raise your score. So, set a day every year like your birth date to double-check everything. Let's start with the most important rule. Pay your bills on time. Every single time, even one late payment can drag your score down. Set reminders or turn on autopay, whatever helps you stay on track. Being consistent now means better financial opportunities later. Keep your balances low. It's tempting to use all your available credit, but keeping it under 30% or, even better, under 10% shows you're in control. Think of your credit like a fuel tank. You don't want to run on empty, but you also don't want it to overflow. Don't close your old accounts. Even if you don't use them much, your old accounts help build your credit history. They show lenders you've been managing credit responsibly for years. Think of them like ancient scrolls in a library of trust. Starting fresh, there's hope. Try getting a secured credit card or ask someone you trust to make you an authorized user. Everyone starts somewhere. It's the smart moves, now that count. Think of this as building your launchpad for a stronger financial future. Credit is a marathon, not a sprint. You can't rush good creditites built step by step, month after month. Solid habits like paying bills on time and keeping your balances low really pay off. So think long-term and stay consistent. Applying for too many cards at once? That's like asking every merchant in a fantasy bazaar for a loan. They start to get suspicious. Lenders see too many hard inquiries as risky behavior. Be thoughtful and only apply when it makes sense. Checking in on your credit is like checking your compass on an expedition. You wouldn't go on an adventure without knowing where you stand, right? Regular check-ins help you avoid nasty surprises. Make it a normal part of your money journey. If you've learned something useful, pass it on. Teaching others about credit, especially family or friends, can make a big impact. It's like handing them a treasure map to their own financial freedom. Share the knowledge and help others win too. We covered what a credit score is, why it matters, what affects it, how to check it, fix it, and keep it healthy. Your credit score is more than a number, it's a passport to opportunities. The good news, you have the power to control it. If this helped you, hit that like button. Subscribe to Sam the Finance channel, And share this with a friend who needs to hear it. Drop a comment below. What's been your biggest surprise about credit scores? Let's talk about it. Remember, this is Sam the Finance Channel. Smart money moves start here. Thanks for watching, take care of your future self and see you in the next video.